Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Monday, September 2nd, 9:09 a.m. Eastern Time. Coming to you from Fort Lauderdale, Florida with the Revere Roundup weekend walkthrough. Happy Labor Day. Hope you guys are enjoying the long weekend and going to walk you through what we're looking at for the week ahead. So as always, what's the trend gauge telling us? Well, we have the four coveted green arrows. Market leaders remain in an uptrend, and then our short, medium, and long term all have the green arrow as well. So let's get into some charts. We'll start with the inter-asset correlation as usual. So the S&P 500, really strong day on Friday, putting a bullish reversal candle, and this is just looking like a really nice high handle, high flag here after this big move up. This was a strong push off the lows, and now seeing 8-9 day consolidation forming a Darvis box. This looks great if it can break out. If we look at the 60-minute, the regime has been, sell the high end of the range, buy the low end of the range. So this is around, the fourth tap of the upper end of this range. So the S&P can get through here with volume, that could be positive. Look at the Qs again, minor relative weakness, but overall, this is shaping up really well, forming the handle out of this cup base. And this looks good again, really strong close on Friday. I'll show you. Had that weakness, but closed well on Friday, and that created a nice hammer candle. So this looks good if it can break out of this cup this week. Dow Jones again, seeing some rotation into safety. This is holding up great. This is breaking out. Mid caps again, another area that we're focused on. This looks fantastic. And this high flag after this big move up. Russell 2000, very similar, looks great. And if you look at the weekly, this is not extended at all. It's still the stage one breakout that we've been talking to. It looks like it's finally, just starting to get going in stage two. The VIX, continues to live below 20. That's what we want to see. And then the dollar, we talked about the positioning. It bounced off this low and it put in a day three higher high. And we're seeing that stochastic start to hook back up. So this is something we're monitoring and definitely seeing, some strength in the dollar. See if it starts to affect equities, commodities, but overall still in a downtrend. So expectation is for rallies to get sold, but given the extremely skewed positioning to the short side, this may have some juice to squeeze. GLD, very dependent on geopolitical and the dollar. If the dollar starts to rally, this could be bad for this sector. It's kind of stalling here, but forming kind of a, high flag, high little base, losing the 8 on Friday. Gold stocks, again, looking constructive for now. We'll see if the dollar continues strength. If it, gets over into gold miners, but overall kind of forming a flag here off the 21. Silver, relative weakness versus gold, RS line back through the 21, and this is losing those moving averages. Bitcoin, pretty weak over the weekend as well, but again, just can't really get any momentum and rejecting this downward sloping 50-day. Total bonds acting pretty well, just consolidating. TLT again, losing the 21, but overall, just kind of consolidating after this move up. 30-year, building higher lows here and kind of breaking this downtrend line. So we'll see if this starts to, move higher. This could affect equities as well, but overall, spec rallies to get sold into when you have a declining 50-day and 200-day. And then TNX, again, similar thing, higher low, breaking this downtrend line, see how it reacts into these downward sloping moving averages. So let's take a look at some of the breadth. This is the NASI. This is the NASDAQ McClellan Summation Index. Continues to be on a buy signal. The best trading environments are when this is on a buy signal trending up, which is what we're seeing. And you can see it's only at 58, has a lot of room up here to the upside. But one thing to note is the RSI is cooling off at this 70 level. So maybe this, backfills a little bit, rest, give the stocks some time to set up again. But overall, good to see this. Take a look at the NASDAQ new highs, new lows, getting positive readings here, staying above the zero line. So we're seeing, cooperation from majority of the stocks in terms of new highs. This is the NASDAQ composite with the percent of stocks above the 20, 50, and 200 day. And this, fits the narrative of broad participation. This is trending up with the price trending up. So that's good to see, and not really getting into overbought signals yet. The S&P, on the other hand, this has some more overbought readings. The percent of stocks above the 20-day is at 91%. So as you can see, this is, getting up there in terms of extended. But, this is a secondary indicator, so this can go as long as it wants. Percent of stocks above the 50-day, 82%, and then about 80% of stocks above the 200-day. And if we look at the NAM exposure index, this is a good thing. We like to watch this for extremes. You can see, below 30 is extreme pessimism, and over 100 is extreme optimism. And we're just kind of right in this mid-range zone, 80. So, not really giving us clear signal here. Otherwise, then you could argue that institutions are underinvested given the market's right under all-time highs, and only 81% of people have exposure. The AAII Investor Sentiment Survey, bears picked up a bit and bulls decreased a little bit. Bullish sentiment is over the 1 year, the historical average. Bear sentiment is below the historical average. So that's some breadth, and then let's get into some focus lists for the week along with some sectors. There's a lot of good looking charts for the week ahead. So talk about some sectors first. XBI, I've been talking about this sector for a little bit on some podcasts and stuff, but it continues to look better and better by the day. It flushed 100 on Friday and reclaimed very nicely, putting in a really strong candle. And this is getting really tight right under this breakout spot. And as you can see on the weekly, this looks right for a big continuation through this stage 1 base. And then fundamental wise, the application of AI for biotech. And then you can just factor in all the good looking biotech charts that fits the narrative for this sector to move higher, and the theme. Regional banks, another great looking sector here, had a strong move off the lows, and now it's getting tight right under this breakout spot. And you expect, as small caps are working, mid caps are working, expectation would be regional banks to work as well. And you can play this via individual stocks, or the ETF DPST is a great one. Let's look at home builders, another very strong sector, flagging right here under the highs. Looks great for continuation out of this flag. And then talking about the individual stocks, Toll Brothers, DHI, KBH, all of those look very constructive. All right, so into some stocks. Tesla, this one's getting pretty tight. It found support at the 200-day, and it's coming against a big downtrend line. So if it can crack this and get above the 50-day, that could be positive. And then Tesla in October has that robo-taxi event. So that's one thing that's a potential catalyst to move this stock higher. Affirm, pretty A+ post-earnings gap action. Had huge volume on that gap, closed high day, now putting a day 2 higher high. And I'll cover Upstart later, but Upstart had a similar profile off the earnings gap. It, put a day 2 higher high and just kind of wedged higher the whole time. So that could be a potential precedent for Affirm, as they're in the same industry group, but this looks very powerful, and it does have some overhead, but it gapped out of a huge downtrend line. If we look at the weekly, You know, you can argue this is kind of a cup and handle. The candle's pretty deep, but given the nature of this stock, that makes sense. So this is definitely one to watch on dips. You can play it against, you know, that high volume close, or just continue to monitor each low. Uber, this has got a deep double bottom base and getting tight on this handle on the right side. Kava, strong gap up on earnings, put a day two higher high, and then had that news of a shelf offering. Now it's pulling back into the AEMA. Put a strong reversal candle on Friday. This one looks great. ServiceNow, this is kind of a base on base pattern. Had a really strong close on Friday and opened up into Thursday's wick, which we call wick setup. JT from Ticker Monkey kind of came up with this strategy, and you know it's a useful thing in our analysis. But yeah, so it opened up in that wick, closed high a day, and this is put in an 52-week high close. So this, you know, this one looks great, and it's got everything right. Return on equity, sales, earnings, EPS rating, SMR rating, composite rating, everything is great for this one. So we'll see if price can cooperate and break out. And if you look at the weekly, this is a really nice base that it's breaking out of. Eli Lilly, let me take this so you can see. Yeah, so this is pretty much in the medical biotech theme, forming a high handle. And again, we know, you know, GLP-1, weight loss drugs, numbers are great. Return on equity, sales, earnings. This one looks great if it can break out of this high handle. ANET, this one again, got the power 3 here, 821.50, all clumped together. This one pulled back, built a higher low, and now it's coming against this downtrend line with these moving averages all coiled up. Starting to see that relative strength line hook back up. First Solar, this one has been lagging a bit, but you know, it's kind of got an inverse head and shoulders look here. It's building higher lows, and this is a pretty well-defined sheet entry here. The 50 days now starting to try to curl back up. Price is holding the 50-day. So if it can break out through this cheat, could see some upside. And one thing to note is it's coming against a key weekly level. This was the prior breakout level that led to that big expansion. So with some volume, this one could be nice. DoorDash, similar, kind of like Uber, deep cup and handle base. Handle's getting tight if it can break through this pivot. Palantir pulled back to the 21 and found support and bouncing really nicely. So reclaim that 30 level, which is a key spot on the pullback. And this one is a clear leader, acting really well. CRS, this is Carpenter Technology. Saw this in my weekend scanning, but this one's building higher lows and getting really tight. Volume's really drying up here on the right side, and that's forming a pretty well-defined pivot. Netflix, the strongest of the Mag 7 stocks, forming a really tight flag here, right? Holding that 700 century mark. And this one looks like if tech's gonna rally, this one looks like the leader for tech. IoT shaked out to the 21-day on Friday, closed high a day, and retested this this kind of previous failed breakout spot. So this one looks good, and this one's starting to show character change. Relative strength lines continuing to make higher highs, and on the weekly, this, you know, is a newer merchandise IPO'd in 2021, and finally looks like if it can break out, can finally start to trend. This one hasn't been the best trender. Every time it broke out, it kind of came back in. Partly sometimes that was due to the market backdrop, but you know, with the market shaping up a little bit better, this one looks good if it can, you know, finally follow through. Spotify, just you know, this one's always on our radar. It's getting super tight under this base, and you can see the volume dry up is getting pretty low. So if this can finally get some volume surge and break out, but you know, for the last couple months, each breakout hasn't been friendly, but you never know when that changes. And the weekly, this is just a really nice trending stock on longer time frames, so that looks good. Meta, this is about the other leader for the mega cap tech. This, looked like it was going to break out here. Now it's pulling back into the 21. Didn't lose this 500 century mark, so the risk to reward is getting a little bit better here. RS line building higher lows, see if it can snap back up to the upside. But again, if tech starts to bounce, Meta and Netflix look like the best candidates there. Coherent, this is a Druckenmiller holding, and this is, a lot of these charts look somewhat similar, but building the handle on the right side, volume's drying up. So if we see some, couple tight days, volume expansion, that'd be good. ON, this is a clear leader, just broke out of this base and forming a continuation flag here, riding the 8 EMA higher. Square. So I just brought this one up as, a firm. This is kind of in the fintech payment processor. And this one's starting to kind of like show change in character. We don't buy things below the 200-day, but it is forming a low cheat here below. So if this can break above the 200-day on volume, this would be actionable for us. But right now it is below the 200-day. So we wouldn't buy it below, but it's right under. It's 1-2% below. So if this can get back above, then this will be back on our radar. And then Upstart, I showed a firm, but this could be a roadmap for a firm, right? This has kind of got a frozen rope uptrend. After that earnings gap, it's just trended higher along the 8, and these rate sensitive stocks, old growth stocks have been showing a lot of relative strength. So potential precedent for a firm, but this one still looks good. And if it dips back into the 21-day or dips back into 40 and holds, it's another buy opportunity for Upstart. So yeah, quite a few stocks on the watch list for this week. A lot of things look good. A lot of sectors are acting well and seeing broad participation. Breadth is shaping up as well. So although it is a short week, could be an exciting week with some of the opportunities setting up. Let's take a look at earnings. Tuesday, we have Zscaler after the close. Wednesday, Dick's Sporting Goods. We've seen, it's been hit or miss for some of these retailers. So Dick's should be interesting. Dollar Tree as well. And that is pretty much Avgo. That's a big one for semiconductors, IoT, which I mentioned that could prompt the earnings gap. Chart looks great. So yeah, quieter week. Earnings are dwindling down, but still some notable ones. And then if we take a look at the economic calendar, Tuesday we have manufacturing PMI. Wednesday, not a whole lot. Trade deficit, job openings. Thursday, initial jobless claims. And then Friday, the employment rate. So not a ton of economic news. So yeah, that's gonna wrap it. That's everything for the week ahead. I hope you guys are having a great long Labor Day weekend. It's a 4-day trading week this week. And yes, that's some things that I'm watching, some things to get prepared, and I hope you guys enjoyed. If you want to reach out, you can email me at connor@revereasset.com. And then you can also find me on Twitter at ConnorJBates_. And yeah, that's going to wrap it for the Revere weekend walkthrough. Hope you guys enjoyed, and good luck trading tomorrow.